Good afternoon. Welcome to the session, Debt Capital Markets, Bonds, and Sukuk. How can the capital markets help? This is Michael Grifferty, President of the Gulf Bond and Sukuk Association in Dubai. Thanks to the Arab Federation for including this key topic in your annual conference. The recent years have been very exciting for the Arab debt capital markets, and they've achieved a degree of maturity unthinkable maybe a decade ago. New issuers have entered the market, new structures have been developed, new national markets have emerged, and the region has become one of the key contributors to the global emerging bond markets, with the Middle East and Turkey now comprising upwards of 23% of the JP Morgan Emerging Markets Bond Index. There's still many opportunities and challenges. Recent conditions in the international markets have been choppy, let's say. So therefore it is particularly relevant that the local currency and national markets are coming to the fore. And I think we're going to spend some time talking about that today. To help us explore these challenges and opportunities, we're fortunate to have a very expert panel. We have with us Mohammed El Ben Salah, Director of Debt Capital Markets at HSBC in Saudi Arabia. Dr. Mohammed Farid Salah, Executive Chairman of the Egyptian Exchange, the EGX. And as well, we are joined by Mr. Khalil El Bawab, the CEO of Bisr Capital in Cairo as well. As the theme of the conference is the Saudi market, I'll begin with Mohammed El Ben Salah. Mohammed, by all accounts, the kingdom has become a leader by prioritizing the development of its debt capital market. And we can see that that commitment is bearing fruit. Would you take us through some of the key drivers or key actions on the part of the authorities that have facilitated this success up to now?
Yeah. So thank you, Michael, and thanks everybody for joining. So in Saudi, the debt capital market has been, I would say, active in one shape or the other since 2006. But in the last 3-4 years, there has been huge developments, especially as the government started issuing locally and developed, local Sukuk program and have done a number of initiatives to really push this market. So starting from 2016, when the Kingdom of Saudi Arabia looked at the international capital market, they immediately looked at the local market and did a lot of the regulatory and market changes to enable this market and make it able to get to its potential. So the local Sukuk program was established, and then all of the government Sukuk were actually listed. And then the primary dealership system was established and 5 primary dealers were appointed. And then other very critical regulatory changes have been implemented, like the zakat exemption and reducing the minimum amount for investment from 1 million riyal to only 1,000 riyal. And that has really, as you said, Michael, paid off. If we can just check at the secondary market activities for the local government Sukuk. In 2018, we were less than $1 billion of overall trading in the market. In 2019, that number jumped to 10 billion. Last year, it jumped to 75 billion. So this is, really huge improvements. And these are, I would say, really the starting. And of course, you will see more potential. And of course, this is only on the local side. On the international side, we have seen more issuers from Saudi tapping the market, really more international investors looking at Saudi and Saudi issuers as a key asset class in their portfolios. So it has really, worked in the overall vision of bringing international investment through investment in the debt securities in kingdom issuers. You're on mute, Michael.
Terrific, Mohammed. Thank you for that thumbnail sketch and for the note. What draws, in your view, issuers to the market? Are private placements a good step? I mean, referring to both international and local markets. What are companies what attracts them to the market now, and as more and more companies have been choosing debt capital markets?
Now, let's just take a step backward and just analyze the basic need. Each company, entity, government, they need funding, and they could look at any, funding source, starting from equity, and even in the debt, they will look at the loan market, local capital market, international market. So at the end, the commercial terms will be the main essence for people to choose how to fund themselves. This is one. Two, there could be other priorities. So some people would want to keep certain balances between bank and non-bank investors, between local and international investors, and this could play into the formula of choosing which market to tap. And we see people, by the way, going to the debt capital market and then deciding this is not for us. And maybe here we are talking about just the benefit of the capital market, but there are certain things that not all corporates actually fit to go to the debt capital market because by the nature of the instrument, the debt capital market issuance are rigid in the form, i.e. very little negotiations, the dates are fixed, etc. There are certain issuers which require a little bit more flexibility, and therefore the loan market will be better for them because they could have excess cash they want to pay early, or they want to negotiate some covenants, which is always easier in the banking market. So of course, at the end, the commercial essence are the most critical, and then other priorities. And we believe now for the good portion of the corporates which actually tap the market, it made commercial sense and it ticked the other boxes.
Terrific. Thank you. I've got other questions. I think I'll hold for the discussion session when we can bring in some of our friends in Egypt. So I think it's timely to move to Egypt now, to Dr. Mohammed Salah at the AGX. Doctor, Egypt's local government debt program has served the country through thick and thin, really, for decades. Now the country is a regular issuer in the international markets, and more companies are looking into the market. What have been some of the achievements along the way from where you sit in Cairo? What's the role of fixed income in achieving some of the development goals of Egypt? If you can touch on that.
Thank you, Michael, for the question. And indeed, we have seen a tremendous shift, and I would say sort of developments when it comes to the fixed income arena in Egypt, and specifically the treasury ones or the government issuances in that regard. I'll take you through the development plan that has been implemented on various stages. The first one related to the government bonds sector, or the government bonds as a product type that we have. The starting point that you needed to extend the maturity curve for trading or for the issuances of bonds versus bills, or versus long-term, I would say, dated treasury securities compared to short-dated. So that was the starting point in terms of creating sufficient instruments on the medium and long-term end of the yield curve per se. So that was an initiative and an effort taken by the government of Egypt. And what helped in that regard was the trajectory of a declining interest rate path that helped the government to move from short-term funding to long-term funding in that regard. And this has been reflected significantly in various issues that we're going to describe. Coupled with that point, we at EGX managed, because almost all government securities are being listed on EGX, and hence we catered and developed a comprehensive platform that allows, I would say, primary dealers. We have as well a primary dealership system that was in place starting from 2002. That would allow primary dealers to have the full-fledged, I would say, trading platforms or methodologies available to them, from trade reporting to firm quotation screens to requests for quotations and continuous trading should the relevant parties wish to activate it at any point of time. We have it ready as we speak now. And this platform supported, I would say, the quotations, supported the trading in the secondary market. I would mimic basically what my friend Mohammed mentioned from Saudi Arabia. We had trading in the treasury bonds sphere around 17 billion Egyptian pounds in 2017, which is around $1 billion. Now we're talking about 378 billion EGP of trading, which is around $24 billion of annual trading for the treasury bonds sector in Egypt. And this is a tremendous, I would say, increase that allowed pricing for the yield curve to improve as and the shape as well of the yield curve to improve for local and private borrowers to be able to tackle the fixed income market. So that is from a treasury perspective regarding what the reforms have been taking place. When it comes to the private sector bonds to be issued, we had some amendments in the regulatory frameworks that would allow, and that was historical as well, allowed for shelf registration. That was an issue that most issuers had a problem with. Unless you manage to tackle the market and go immediately, you will not be able to tap the market with your issuances in that regard. And there were other amendments that allowed for the same special purpose vehicle to be issuing several asset-backed securities. However, we need to take into consideration that we don't need to repeat the mistakes worldwide. We all remember in 2008, the crisis that happened, the international financial crisis at that point of time, which was mainly driven by not having securities being listed on exchanges or even clearing and settlement firms, and hence the exposure could not be identified or quantified by any particular entity apart from the firm facing the troubles again. And hence the option for having every single, I would say, security being traded and listed on EGX, and as well being settled through a central clearing agency, is quite of paramount importance. In that regard, the number of I would say listed securities, especially in the asset-backed security sphere, increased tremendously. Two other important amendments, one has been in place and the other one, and I will tell you how this would allow or help in the development goals moving forward, there is a law now being discussed at the parliament level, whereby it would allow for sovereign Sukuks to be issued for the first time in the Egyptian context. And here we understand in Egypt that there is a different clientele that needs to be served with particular products that cater for their needs and cater for their views. Accordingly, we should be having this regulatory framework being issued very soon or ratified by the parliament or by the president once it passes the parliament and the discussions in that regard. Additionally, we had some amendments in the capital market law and the executive regulations of the capital market law that allowed for private sector issuances of Sukuks, and indeed we have seen one or two issuances in the market. All of this we need to take it into perspective. Ultimately, financing companies or financing projects is to achieve the ultimate goal of any economy, which would be creating sufficient growth that would create sufficient employment, that would decrease the unemployment levels, improve the prosperity in that regard. We have the 17 items of the SDGs announced by the UN, which is water finance, education finance, and so on and so forth, or education, poverty, and so on and so on. All of these items would need financing. So without having proper, I would say, productization for the types of Sukuks and bonds being issued, that would allow to cater for large portions of the society rather than only institutional investors, we are going not to be achieving the developmental goals that any economy would be willing. We know that we have plenty of projects that can be financed via, for example, green bonds and probably blue bonds, which would be related to water, desalination, and so on going forward. So basically, we need to create specific products, or the market participants, and Khalil can be jumping in that area to create specific products that would allow for a large portion of participants to participate in these developmental goals, because you have two roads that need to match: the road of the need of the projects, and whether it is private sector projects or public sector projects, and you have the road of financing that needs to match. Historically, you used to finance mainly these type of projects via international financial agencies and developmental agencies that are catering for these type of projects. However, with the required I would say number of investments and financing, you need to allow public markets to be participants in that point of financing or that part of financing. And this is how that capital markets, while maintaining clear risk management policies and procedures, maintaining clarity towards the clearing and settlement and the trading of these particular products, this would be able to achieve or support in the financing the developmental goals of any country.
Thank you, Doctor. Thank you for reminding us, underlining that the markets that we work in every day don't exist in a vacuum. They serve a public purpose and towards the development of society and don't exist for their own good. You've left us with a number of items that we'll pick up on. And as you suggest, I think it's timely to bring in Khalil El-Bawab at Misr Capital, perhaps to go on a bit more deeply into the market and products and structures that we're seeing and will see. So, Khalil, your company is on the sell side as an arranger, a DCM powerhouse, and on the buy side as an asset manager. Every day you're speaking with clients and preparing issuances. So what does fixed income offer Egyptian companies? I recall some time ago hearing from corporates that the market was cumbersome and maybe not worthwhile accessing, but I think that's changed, and the reforms and legislation that Dr. Mohammed has gone through are key to that. But what do you see the market, the EGP market, offering to companies, and what kinds of structures do you think we can expect to see serving the market?
Sure. Thank you very much for the Arab Federation of Exchange for allowing us to be part of this great event. Thank you very much. Good morning or afternoon, everyone who's following us. Basically, the market here in Egypt, as Dr. Mohammed Farid kindly mentioned, have been evolving and have been developing across the past few years. Currently, if we talk about the sovereign bonds, currently we have a proper yield curve ranging from the treasury bills short-term 91 days up to 15 years in issuances. And 15 years just was introduced recently in the market after a long wait. The last 15 years was probably 10 years ago, and now it's back in the market. So we have the proper yield curve. If we look at numbers since 2011 until 2020, the corporate bond issuances grew from 350 million in 2011 to 5 billion in 2018 to 9 billion in 2019, and in 2020 it was around 14.6 billion Egyptian pounds, which shows basically the gross and the momentum in the market, which is driven by regulations, to be completely honest, driven by market dynamics. The Egyptian economy have been doing really well and was very positive on the upside the past few years. And it's all due to the monetary, fiscal policy, regulations, and so forth. If we look back in time, we only had corporate bonds and securitization issues. We started seeing last year introduction of, or actually a couple of years ago, the introduction of the short-term notes, and last year we started seeing the Sukuks issues. Last year alone, we saw issues for around 5.1 billion in Sukuks, coming from basically zero, variety of structures, and we see strong momentum. It's basically, as you kindly mentioned, we talk to clients on the buy side and the sell side. The issue is not on the buy side, to be completely honest, because there is lack of supply. And our role as a sell side advisor is to create awareness among corporates, private or public, on the importance of the debt capital market issues and its benefit to their balance sheets, funding structure, as one of the important tools for their capital structure. And this is what we have been doing. So I wear another hat, basically, which is a fixed income association, and I should mention the efforts being done, which is a group of issuers, investment bankers, and basically buy-side asset management firms. And the role, and we're working in parallel with the regulators to improve the market, to develop the market, starting from basically educating issuers, educating brokers, educating investment banks on the importance of this market. And we have seen a tremendous gross, the shelf listing is a major component. Most of the issues that take place right now on the corporate universe is private placements. And what we have been doing in the past couple of years is basically to increase the number of participants in those issues. We don't want to limit it to basically the usual suspects, which is currently banks. We want to basically avail it to basically asset managers, pension funds, insurance companies. Eventually, it will reach to corporates, to corporate investors, and retail investors. So we are working currently with the FRA to improve this and put some basically regulations on availing some of those issues for public placements. That will definitely, the more participants we'll have, the more potential issuers we'll have, and definitely that will definitely improve the secondary market execution. And for that, the stock exchange, and thanks to Dr. Mohammed Farid, they have been improving the trading platform, and a new platform is being launched very soon, which will facilitate all this and will make basically the market more transparent and easier to execute. So it's a combination of too many things that happening at the same time, at the right time, and there is full coordination between all parties, because the goal is to develop the markets.
Thanks.
As for the new structures, basically the Sukuks. Last year we saw 3 issuers. I have a pipeline currently right now of at least another 3 new issuers that haven't done basically either securitization or corporate bonds. I'm talking about real new issuers, not new issues for current existing issuers. Thank you.
It's nice to know that the pipeline is filling, Khalil, and hats off to your work in spreading awareness as well, including through the association, which we understand and support and completely understand. For perhaps Mohammed and Khalil, perhaps a question. Focusing on Sukuk for now. Cross-border Sukuk, in particular, has been a bit slower in terms of issuance in the past 12 months or so. And you tell me if you agree with that assessment. But why is that the case? Do you think it will pick up? And what are fund managers and investors saying about Sukuk?
First of all, you need to cater that there will be like one-off jumbo issuances that would not come every year, and this could, show a picture of certain decline or certain increase, which may be not a full reflective of the trend. So this is one. Two, yes, there has been a little bit more requirements, more, I would say, complications on the Sukuk structures. There is a new AFE requirements, which is limiting certain investors in certain jurisdictions from accepting some of the structures that are approved somewhere. And, there is no unity in this platform. And therefore, some people choose to go to the bond market because it will be just easier, smoother. So from that point of view, some people really opt to go to that, especially if there is no internal pressure. Now, the majority of the corporates, especially in Saudi, like the local market is 100% Sukuk. So there is no local bond issuances, it's all Sukuk issuances. For the cross-border, there will always be multiple factors, which, regarding the tenor, the desired distribution of the investors, etc., which could be the main driver, and maybe Sukuk doesn't come as a priority, especially at that some issuers, especially if they need to change their Sukuk structure or they run out of assets that are eligible for whatever structure they used to have, etc. They may opt to just go to the bond market. However, I still believe Sukuk will be relevant. We have the United Kingdom just issuing Sukuk. We have other high profile investors having both bond and Sukuk format, and they tend to tap both depending on the market conditions. So from that point of view, maybe it is not as growing in one direction as people say, but it's not like falling, or really there's a trend of reduction.
Okay. Thanks, Mohammed. Yeah, it's certainly an asset class which is going to continue. It's got a role that's not going away. That's not going away anytime soon. In terms of other products that we can look forward to, what do you think about? And I ask to Dr. Mohammed and to Khalil as well, the topic of green transition and sustainability linked offerings from the Middle East. Do you think that green bonds and Sukuk will continue to be issued from the region, or has it been more a matter of kind of the low hanging fruit or demonstration projects? And sort of adding to that, are issuers aware of brown? We've heard about green and blue in the conversation thus far, but also Etihad, an airline, had issued a transition bond late last year, and one might think that for this region that might be something that could draw in some issuers who might not have thought themselves eligible for that, national oil companies or things like this. So what do you think? Perhaps just to continue with Mohammed and then on to others.
Yeah, so just to start, let's just get back to the basics. So commercial is the basic, and at the end, people will follow the most competitive commercial thing. And if such, green, blue, brown, or any other Sukuk structures or any other transaction structure would improve the terms and providing the commercial benefit, people will consider it. This is on one hand. On the other hand, there is definitely an increased focus on ESG in each and every entity, in each and every country. And this is not going away. In fact, it's just starting. So we'll definitely need to see each and every corporate to have their sustainability plan, sustainability report, and therefore they will have their own sustainability financing, because they need to tick that box, and they will have underlying a project that will support it. Now, of course, some will be faster than the others, but this trend is definitely only going in one side. It's growing.
From Cairo, perhaps Dr. Mohammed, the
I can't. Please, Dr. Mohammed first, please.
No, please, Khalil. I'd like to speak at the end.
Yeah. Basically, I can't agree more with Mohammed. The potential is definitely on the upside. We have potential green bonds issues. I would like to see them coming out of the market this year. We'll see social bonds. We'll see sustainability bonds later on. So it's definitely on the upside. Already on the equity markets, we have our ESG policies. We are very aware of it. Our clients becoming more aware, the money owners. So have to have it ESG policy going. So
Khalil, we're having a little difficulty. I don't know if others
I'm
are.
sorry.
Okay, better. Please.
Same here. Yeah. I was cut off. Basically, we will see green bonds coming out. Eventually, later on, we'll see social bonds and sustainability bonds. We definitely have our ESG policy on the buy side, and for sure, the issuers will be more aware of it, and it's need. It's an awareness that keeps building up, basically. So there is no way to stop it. To be completely honest. 10 years ago, when we mentioned the terminology of ESG, we were not really aware of it in the region. But now it is definitely there. Definitely, we're quite aware of it, and we apply it to the best of our knowledge and capability. To be completely honest.
Yeah, indeed. Even if you're quite correct, I think in underlining that even if you're not going out for it with a labeled bond or sukuk, it's coming because the investors are asking these questions more and more, and you'd want to better be prepared.
Definitely.
Questions, and actually, if I may remind the audience that as we shift to Q&A,
I'd like to comment on that point, Michael, please.
Please.
Okay, we need to take this point from several angles. Okay, the first angle would be the rise and hopefully the continuation of the COP meetings, and we're having the COP26 coming in November this year, which would clearly stipulate requirements when it comes to carbon emissions and so on and so forth. So basically, this would require further, I would say, investments from corporations and the governments as well on carbon reducing technologies, investments that would require financing for these type of projects, and hence the labeling of green and blue and all of this associated, and the transition bonds that you have mentioned would be one of the areas. Having said that definitely the trend of issuances should be on the rise and continuing in that direction, unless investors as well are willing to put, how can we say it, and I'll be as blunt as possible, to put this point into consideration when they're looking at the commercial terms of the different types of bonds and sukuks that are catering for the environment, whether they are green, blue, brown, and so on and so forth, because the doctrine here or the premise is that these type of projects, given that the morality of doing these type of projects indicates that the firms, the countries that are doing those type of, I would say, initiatives are less risky, and hence should be compensated in terms of commercial returns that my colleague Mohammed here mentioned. So this is the other spectrum. You have the supply side or the issuance side of the securities itself. This would continue to grow either naturally or exponentially, would depend along the way of the public policy associated with this item. However, if the demand side is not only about asking the question, but as well about benefiting the issuers that are trying to follow these types of premises of issuing green bonds and sustainability bonds and impact investment bonds, hopefully one day that we will be having bonds that are associated with investments that have an impact on the society, not only from an environmental perspective. If both supply and demand don't match, you will always have an issue and a question that you raised now. So basically, if there is demand, this demand has to be justified in terms of commercial returns on those particular types of sukuks and bonds to further promote and encourage institutions to go for these types of projects.
Yes, thanks, Doctor. Mohammed, there were recent announcements from the kingdom, as I recall, in terms of sustainable growth, not just targeted at finance, but do you see this really coming together from a not just the financing point of view, but broader economy as well?
It's a top agenda at all levels, and the recent green initiative that was announced by His Royal Highness just show how important this initiative is. And there are so many initiatives that have already taken place, and they are not associated with financing, about saving energy, about promoting recycling and all of this stuff. Yes, it's coming slowly, but it has been there, and now it's going to be pushed further.
Okay. Thanks, Mohammed. If I can just remind the audience that you have an ability, I believe, to pose questions. We've received a couple. There was one specific question for Khalil, reference to the 3 transactions that I think in preparation you had mentioned. Is there an approximate sizes or volumes for the transactions that I think you had mentioned? One of our
basically the volume, the 3 transaction hovers between each between 1.5 to 2.5 billion Egyptian pounds.
So you are already sold, Khalil, before starting.
Okay, thank you. Yeah, we hear from our global buy side investors who are looking at globally at the region. I mean, who are looking globally, but including at the region and compare region to region, issuer to issuer, that if the volume.
I'm sorry, the line was cut. I'm sorry.
Okay, we can hear you now.
Yeah, basically the 3 issues hovers between 1.5 to 2.5 billion each Egyptian pounds.
Okay, thank you, Khalil. Certainly, the volume of issuance from within and from the region, it's going to be growing. At what pace we don't specifically know year to year. As Mohammed points out, big chunk issues make a difference in the short-term statistics, but the trend is clear. We're hearing from our buy-side investors that to support continued issuance, that investors are going to want to see more structure, some of which you have mentioned, different kinds of financings and so on, be it Sukuk, straight corporates, sovereigns, and other varieties. Securitizations have been mentioned, especially in Egypt. Securitization has been a bit, if I may say, slower to develop in the Gulf. Infrastructure needs, hard and soft infrastructure. What about project finance offerings secured by projects with cash flows and so on? At one point, this was the the domain largely of international financial institutions, the World Bank, and so on. But do we see interest in issuance for perhaps longer dated instruments, or are there suitable projects that global investors who look for 40-year returns may be interested in? For Mohammed or Khalil, or?
Yeah, if I start now here, there are a lot of projects which could be potential for such, but what we have been seeing, over at least the last few years, that bank financing has been much more competitive, which doesn't, allow those people to think about a project bond more seriously. And it is an issue because you have these kind of projects where they are very strong, with very strong sponsors, already constructed, etc. And they can always refinance with the bank market easier, smoother, and they can get always better commercial terms. And you have other type of projects which maybe are more struggling, etc. And those you cannot take to the international market because they are not in a good shape. And the other element is, or the local market, especially the bank market, takes certain faith on certain sponsors and certain projects, which cannot be supported by credit rating because the credit rating have their own methodologies, and therefore this project doesn't achieve the required rating, which could give them the required return, and therefore this initiatives dies away. We have nevertheless seen some examples. Aquapower have done a project bond, and there could be there were others from the region, but yes, this is a dilemma where we are facing when we want to promote this.
Yes, indeed, it comes back to where you began, your remarks, Mohammed, the commercial terms.
Absolutely.
Khalil, I suspect that this must be talked about in terms of important critical projects.
Yani, from our point of view, the market appetite beyond 5-7 years at this point in time is quite limited. Not that there are projects that doesn't need financing for much longer terms. It has to do with yield curve. As I mentioned, the 15 years have been in the market again. I'm talking about the treasury only last year. So the longer yield curves that we have, it will give us more comfort, to be honest, for the investors to start tapping into that market. But currently, the sweet spot is between 5 to 7 years.
Yeah, understood. For Khalil, one thing that's always struck me, left me curious, is the attachment or the value of securitizations. And I asked to Dr. Mohammed or to Khalil in Egypt. It's the securitization market almost preceded the corporate market in some ways, or the senior unsecured market in terms of numbers of issuances and so on. What's behind that?
It's Dr. Mohammed, please.
لا لا خش خليل خش.
لا please.
No, it's fine. It's fine.
I'm sorry. I'm sorry. Basically, it's deleveraging for leasing companies as a tool, and it have been growing in the market since 2005.
But another reason, Michael, basically that you have a significant retail sector and consumer sector. So basically the asset-backed securities that we're talking about are either have portfolios of financial leasing firms, real estate financing, and as well consumer goods portfolios that are being aggregated and then thrown out in the or issued in the bonds market. So basically, because of the sheer size of consumer finance in Egypt, and that's why the asset-backed securities or the securitization market is by far surpassing that point. And given that as well, the reliance, yes, Khalil mentioned deleveraging from the one hand, but as well relying on the interest rate differential between consumer loans that are being taken from the entity that is securitizing and the interest rates in the bonds market, which is much lower, and hence there is an interest rate benefit and spread between what you are taking as an average yield on your portfolio and what you can be securitizing in the market, which adds more cushion for these type of firms to go through the market. I want to comment as well on the project financing here. I'll tell you the route to have it. To have a 40-year project financing bonds or Sukuks, most probably they have to be initially backed by the government as a starting point. So it needs to be a governmental project that paves the way for other projects to follow on. But investors need to be, how can I say, acquainted with those, I would say, maturities and type of products. We have, for example, in the Egyptian context, for the first time, we have issued a 30 years bond in international markets. Well, كانت 40 يا Khalil. It was either 30 or 40 years bond in 40. International markets. It was 40 years. And that was for the first time for Egypt to extend the international yield curve on its international bonds in international markets. So that is a starting point. Then that can be coupled with specific project bonds or financing that is supported by or backed by the government that would have a sovereign backing. And after having this, we might be seeing specific private sector projects going for having project financing. But there has to be someone that would take the first wave, I would say, of issuing those type of securities.
Yeah, indeed. Thank you. It's an uphill battle. We'll know we have arrived when we're doing 50-year project bonds from the region. Okay. Well, look, I'm conscious of the time allotted and for everyone's time here. So it just remains then to thank each of our speakers, Mohammed Al-Ben Salah, Dr. Mohammed Farid Salah at the EGX, and Khalil El-Bawab. Thank you all for your time.
Thank you.
Thanks
Thank you
to the Arab Federation of Exchange.
Thanks to you.
Thank you.
Thank you. Enjoy the rest of the day. Bye.